traders.com. This is the daily primer for the 27th of November. It's Black Friday. I'm going to be doing something special for you guys. In this video, I'm going to tell you or educate you on the two different ways of trading, at least that I know of, or the two different ways that I use to approach the markets. To me, there are two ways. One of them is very short term, taking profits at key levels, and the other one is trying to ride it to a take profit or to the fibs. The difference in the two trades is the longevity of the trade. On the first option, where you take profits quickly using the minute charts and being focused on key levels, you pretty much focus on minute trading. You're in for minutes. You're not even in for more than 30 minutes generally, because you're looking for the best entry time. You go big, boom. And the other one is trying to ride out the prediction of the market. I used to do this a lot. It used to make me money, but I used to take losses too, and sometimes I'd wait far too long for a trade to work out. Very soon, actually let's do this right now. Let me take you into my screen and I'll showcase exactly what I mean. Okay, so I promised to give you two different sets of ideas of the way of trading. Now this is my own personal, little ideas. There must be a million other ways, but I'm just going to give you the two that I find very useful for my trading system. The first one would be trading on, longer time frame moves and targeting bigger movements in the markets. So we have this XRP USD long. We've taken this yesterday. We came out up here. I'll show you the profits. Actually, I'll put them on the screen right now here. There they are. So we close them, and that's one way of trading, getting into trades and trying to ride the bigger moves and targeting key levels. And what do I mean by key levels? So here we have the Dow chain channel, the middle, the 30, and price action came close to it after breaking out of it, but also came to this rejection zone here. You see this, and price rejected the levels. Now there are still indications of bulls because we have a potential head and shoulders. Price action tapped the 38.2 here, and then we have another 38.2 idea here, 38.2, and we might have a potential continuation. So the idea is basic. You target bigger moves in terms of key trading levels. The other one is taking profits up here. You see this move? It pushed up, this 1 hour candle, bump, came to this key level, there, and you get out. And then you wait for the price action to come to a next level and continue doing the process over and over and over again, getting in only at the 38.2, coming out of key levels, and that's it. That's the second version, and that's the one I prefer much more, to be honest with you. Now, when I'm really busy or I see good potentials for movement in my direction, such as XRP, I think there's really good. There's a really good chance for the crypto markets to continue their longs, even though we had a 10% drop yesterday. I think that there could be the possibility of higher moves. So let's go on to another chart. Let's go on to WTI, for example. The idea here is pretty simple. You're using the 1 hour and the 4 hour charts to locate trades. Let's go like this. We've got a trade right here. Top, bottom, there's the 38.2. RSI is not at the bottoms, but it's coming out of a major bullish push, and if we go down to the 1 hour, RSI should be at its entry. Yes, it is. There it is at the bottom. You get in and you target the fibs. Let's do that well now. So the take profits generally would be these levels up here: 100, 1236, 138, 161. And what you would do is basically push from here all the way up to 100, 123.6, and so forth. Of course, locking in your trade and managing the trade. It always comes. This is not a get in and forget about the trade. This is not trend trading. This is pure day trading. So the criteria that we would have for this trade on WTI would be, let's say you enter the fibs 38.2 or 30%. You set your SL below some kind of spikes or key levels like this here, and let's say you take it up here, right? Now, while you're doing all of this, you have price action pushing up. Let's move this. Focus on my mouse. You have price action pushing up, comes to the RSI up here and pushes down. Okay, you would still be in the trade because you're expecting 138. What you would do is you would take this again, top to bottom, and you would set your SL or move your SL into profit right there. Okay, so let's go like this. You would set it below the 30%, somewhere there. So move it into profit, lock in your trade, secure it, and that's it. And then the basic point would be there is a spike here. We have a rejection zone. We have a rejection zone. So you move your take profit. Oops. You move your take profit down to the 100% mark, and there is a secure trade. This is one way of trading. Now this would take a long time to reach. So from your entry until here, that's 23 hours. Classified almost as swing trading, right? Because you would wait for the next day. So that's the basic idea. And on the other side, what you would be doing with short-term trading, and I can show you this on Bitcoin. This is a trade we had yesterday and even today, this morning. What you would be doing is you're looking for these little levels. I'll show you this now. So price action was at 30% already, and we have this. See this? There. This rejection candle is your entry, RSI is low, and what you do is you target the next set of key levels. See this? All of this here. You would target this and you get out. You do not care about the major move. You don't care about price action going all the way up. All you care about is getting in and getting out to the next key level. And we have the same idea yesterday again. Let me just find it. Yeah, here it is. This is another one we took yesterday, last night. So you have the same idea, rejection, and then you have support. See, a little bit of a contraction. You get in, get out at the next key set of key levels. Because price action does not move in one direction for forever. It moves in sideways movements. And then you have another one here, and this is another one we've taken on Bitcoin. Again, a contraction. And again, exactly the same pattern we just had this morning. And then you focus on the next set of key levels, which would be this here. So you get in here, get out there, and that's it. I hope this helps you out. It is a busy morning for me. I have a lot of things to do, a lot of trades going on. So I don't want to keep this video too long. But yeah, again, the basic point is this. You need to understand your approach. Okay, you need to know how you're trading. And you need to decide that in the morning, right before you get into the charts, make your executive decision and say to yourself, this is exactly what I will do. And stick to your words. So let's say here, we've got a potential trade on Bitcoin right now. We have this little trend line. This is a 2-minute chart. We have the top, we have the bottom. Price action is very close to 38.2, and I would say we take it up from here, and then either go up here, because that is a key rejection zone right there. You see, it lines up, or try to target the next one, which would be this. Then how do you set your SL? You can even get in now. You set your SL below these spikes. Set your take profit up here, and there's your 6-to-1 risk reward. And it can be reached in minutes, and you won't have to wait for forever to, make a profit on this one. So I'll let this stream for now, even though I would ideally wait. RSI is still not at the bottoms, so I would wait, set a pending order right there, SL right here, and I'll let the stream steamroll for a little bit, and we'll end the video there. If you're watching this in November, if you're watching this video as soon as we uploaded it, November 27th, until the end of this month, until the end of November, we're running a free promotion, giving you free access to everything we've got. Just head over to primetraders.com or shoot me an email at dennis@primetraders.com. Thank you so much. Have a beautiful, beautiful day.